much did that. If you look at the kind of upside case of $5,000 gold and maybe $90 silver, where you're basically at today, that generates an after-tax NPV of $6.6 billion, 118% IRR.
Hey everyone, welcome back to the channel. So I came across this interview with Dr. Euan Webster, the CEO of Thesis Gold, and what caught my attention immediately is the numbers he's throwing around for their Lawyers Ranch project in British Columbia. We're talking about a $6.6 billion after-tax valuation with a 118% internal rate of return at current gold and silver prices and a 6-month payback period. Now, those are the kind of economics that make you stop and ask, is this actually real, or is there something we're missing here? You're going to want to stick around for the whole thing because we're diving into not just the numbers, but the strategic positioning, the district potential, and why this project is getting serious attention from major players. Also, drop a comment and let me know where you're tuning in from. I love seeing where everyone's watching. All right, let's jump into it.
Now, Thesis is a gold and silver developer. You're advancing the Lawyers Ranch gold project in the Tudongong district of British Columbia. Lawyers Ranch is an epithermal soil deposit containing about 4.7 million ounces of gold equivalent. Meaningful silver component to that, which we'll get into in just a little bit. Ewan, let's start by asking you about, what is the history of the deposit and Thesis's involvement with it?
Yeah, so the project itself, the Lawyers part of it anyway, was an active mine back in the late 80s, early 90s for about 4 years, high grade underground. And then it really just closed with depressed gold prices, sat pretty dormant for a couple of decades. It was held privately. And then we structured a deal in 2018, the predecessor to Thesis, Benchmark Metals, did on the Lawyers project, and recognizing that there was probably more upside here than just a higher grade underground ball tonnage system, or certainly evidence of that, and then accelerated the project pretty quickly through. At the same time, we started Thesis Gold on the Ranch project to the north, and with the vision of having the same potential. And then in 2023, merged the two companies together. I stayed on as CEO and put a very simple plan in place to kind of demonstrate the scale of this asset and how good the economics were. And that was an updated resource, PEA, and subsequent PFS that came out last year, kind of demonstrating how strong this project is. And I think we're on a very good path in 2026.
Absolutely. Let's talk a little bit about that pre-feasibility study. It was released, just before the end of the year, in late November, early December, I believe. That's an open pit and underground mining operation to produce an average of 187,000 ounces per year of gold equivalent for 15 years at an all-in sustaining cost of $1,185 per ounce, following an initial capital investment of about $736 million Canadian. The project will yield an after-tax net present value of 2.37 billion Canadian dollars at a 5% discount rate, with an internal rate of return of about 55% and a 1.1 year payback, using base case gold price of $2,900 per ounce and a silver price of $35 per ounce. Ewan, what were you happy about with the pre-feasibility study? What did it deliver you really wanted to see?
I think, really the economics that you pointed out there, exceptionally strong. And that was using pretty conservative commodity prices. It came out December 1, as you said, $2,900 gold, 35 silver. We really wanted to let the project speak for itself. And I think it very much did that. If you look at the kind of upside case of $5,000 gold and maybe $90 silver, where you're basically at today, that generates an after-tax NPV of $6.6 billion, 118% IRR, an NPV to capex ratio of 9 and less than a 6-month payback. So, the economics really stand out in what is a very small developer space. I think there's very few good caliber projects out there. So I think that's what allows us to stand out. I think that's what the PFS did very well for us. But I think what it also outlined is just a very simple project here. We're in a great jurisdiction. The capex is relatively light because it's a brownfield development site. But on top of that, I think just the the mining methods, the flow sheet, it's very straightforward. This project, although it has small challenges, they're all very capable to solve. So it's I think it really stands out.
Now, the economics are impressive.
Okay, this is exactly what I've been talking about when I say the junior developer space is completely broken right now. When Euan Webster drops those numbers, an after-tax NPV of $6.6 billion with a 118% IRR and a 6-month payback. You need to understand what that actually means in today's market. That's not just good economics, that's exceptional by any standard, and he's running those numbers at 5,000 gold dollars and 90 silver dollars, which as of early 2025, we've already blown past. Here's what most people miss about these feasibility studies. The base case they released in December was using $2,900 gold. That was conservative then, and now with gold pushing above $5,000, you're looking at a completely different ballgame. The fact that this project generates a 55% IRR at $2,900 and jumps to 118% at current prices tells you everything about the leverage these developers have in this environment. And when he says there's very few good caliber projects out there, he's absolutely right. The pipeline of shovel-ready gold projects that can actually generate these kinds of returns is thin. We've spent a decade underinvesting in exploration and development, and now with gold at these levels, everyone's scrambling to find assets that can actually get built. A project with 187,000 ounces per year, production over 15 years at sub $1,200 all-in sustaining costs. That's the kind of asset that gets attention in M&A discussions. The grade profile he mentioned is critical too, 2 grams per ton on ranch, 3.5 grams per ton underground. Those are serious grades that drive the economics.
And thank you for that update. When you released the PFS in December, your upside case was $4,100 per ounce gold, $51 per ounce silver. We're obviously way past that, so thank you for giving the numbers at today's prices. Why are the project economics so strong?
I think we spend quite a lot of time on the sequencing of the mining, but really it comes down to the grade. The grade on the Ranch project is about 2 grams per ton gold equivalent, and on the Lawyers project, it's a little bit lower than that at about 1.33 globally. But we spend a lot of time working on the sequencing of Ranch, plus the underground, which has a head grade of 3.5 grams, and how that interfaces with the open pit development on Lawyers as well. And I think that sequencing really allowed us to put forward a very strong economic outlook for the project.
You mentioned the project's a brownfield project. You're in the Tudogong district in British Columbia. I'd imagine most of our listeners are perhaps more familiar with the Golden Triangle district, which is further north. So tell us a little bit about the Tudogong. What are some of the benefits that has, and perhaps why do you think that's been overlooked and superseded perhaps by the Golden Triangle in more recent years?
Yeah, it's a great question. And I started working on this project back in 2018, and I'm a geologist by background, recognizing that this area has the same types of rocks that they have in the Golden Triangle, same types of alteration, same styles of mineralization, but I'd really seen a kind of fraction of the exploration dollars spent in the Tudogong versus the Golden Triangle. And the historical perception was that these deposits were kind of small, higher grade, but really didn't have the legs to build out into more significant deposits. And in my mind, it was more just we need to spend the money here. And I think we're going to be able to demonstrate that's not the case and hopefully make some significant discoveries along the way. And thankfully, we're really now at that point where we're at 5.2 million ounces, but a very clear path, I think, to much more ounces in the near future. On top of that, nice to see AMark and Freeport make a fantastic porphyry discovery right at surface recently. And I think that just speaks to the upside that still remains in the Toodoggone. So it's, in my mind, very much so emerging as the most exciting exploration district in Canada, if not North America at the moment.
Now, as you mentioned, Ewan, you're a geologist. You've taken the company and the projects through to PFS stage. Economics are great. What's the strategy from here? Build or sell? Is there still more to come from the projects?
Yeah, very much so. I mean, I think we've laid out, and there'll be more to come on this, but very much moving through the feasibility study. That's some of that work actually happened last year, where the rest of the data collection will happen mid-2026, and we're looking at feasibility in the second half of 2027. That coupled with the commencement of permitting back in the middle of December last year. So that's very much underway as well. Great time to be entering the permitting process with, both provincially and federally, the governments are pushing to reduce permitting timelines, recognizing that we're a resource based country, and that is really going to help drive GDP going forward. So very pleased to be entering the permitting process at this point. And, all of that continues to just de-risk the project as we move towards a construction decision, hopefully in late 2028.
So the company's aim is to take the project into production?
I mean, that's the goal right now. And obviously, we're just going to do whatever is best for shareholders. I mean, we're working under the assumption that, we're going to build this, we keep moving it forward, we keep de-risking it. But at the same time, if, we have a data room and people are in the data room, if there's any offers come in, we will obviously do what is best for shareholders and evaluate those as they come in. But very much focused on just driving the project forward. And I think that's how we maximize returns to shareholders.
Okay. Now, another factor, positive factor.
Now, this part about the Toodoggone district is where the geological thesis gets really interesting. When Ewan says this area has the same types of rocks, same alteration, same mineralization styles as the Golden Triangle, but has seen a fraction of the exploration spending, that's a massive statement. The Golden Triangle has been the darling of Canadian exploration for decades. You've got Seabridge's KSM, Pretium's Bruce Jack, all these world-class deposits. But the Toodoggone got overlooked because of this perception that the deposits were small and high grade, but couldn't scale. What changed? Systematic exploration with modern techniques. They've taken this from a historical perception of limited potential to 5.2 million ounces, and he's saying there's a clear path to much more. When you combine that with the AMark Freeport porphyry discovery he mentioned, you're starting to see district-scale potential emerge. This is how major mining districts get re-rated. One company proves the concept, others follow with more discoveries, and suddenly you have infrastructure, synergies, and economies of scale. The build versus sell question he addressed is crucial. They're advancing toward a feasibility study in the second half of 2027. They've already started permitting, and they're de-risking this methodically. But he's also transparent. He said they have a data room and people are in it. That's code for we're having M&A conversations. With gold at these levels and producers sitting on massive cash piles from 2024 to 2025 earnings, assets like this become acquisition targets. The question is whether they get better value building it themselves or selling to a producer who can fold it into existing operations.
Behind Thesis Gold, you've got a 9.9% shareholder in the shape of Centerra Gold, a gold producer. Centerra is also looking at significant growth in British Columbia, including its Chemist project, which is just 45 kilometers away from where you are. It recently announced an updated resource and PEA, preliminary economic assessment there. Ewan, tell us a little bit about the relationship with Centerra. How do you and they interact, and how do you perhaps together or separately see the future development of the Toodoggone district?
Yeah, so Centerra came in as a 9.9% equity shareholder in April of last year, and very strategic interest or very strategic position for them, given that Chemist is only 45 kilometers away. And as you said, they've got Mount Milligan just a few hundred kilometers down the road as well. So very focused on British Columbia, good depth of expertise there. And nice to see recently, or just earlier this week, the PEA come out on Kemess, and obviously a clear path back into production from that. Also really nice to see Premier Eby commenting on the press release and recognizing how much that it will help with driving jobs to the north. But it's we work very well together. There's real synergies in the district. I think looking at Kemess, it's obviously a fully permitted 50,000 ton per day mill with tailings, camp, etc. So it's, how can we possibly utilize that infrastructure that's already in place? They have the power line at Kemess as well, and we have quarterly technical meetings where we get together and we discuss the geology, the engineering, and the direction that we're moving in. And those are very productive. We work very well together, and it's really just about sharing knowledge.
Is there any sort of potentially sort of internal scoping study of what the situation could look like bringing the two projects together?
Not at the moment. We're just working on advancing our project as a standalone asset, and as you can see from the economics, that we talked about earlier, it's a very, very strong project as a standalone.
Okay. Now you mentioned Centerra's Mount Milligan, and it's received its amended environmental assessment. Now, Mount Milligan was selected by the province as one of 4 mining projects for expedited permitting with the specific aim of supporting economic development in the province. Is expedited permitting something that is perhaps a possibility for Lawyers Ranch?
I think very much so. There's not a lot of projects of this size that would provide this much opportunity to, as I mentioned, to communities in the north, to the nations, and really help drive the GDP in BC as well. So I think Eby's look west philosophy for how we continue to grow as a country, the timing of us moving forward plays very much into that. So yes, I think there is.
And what would you say is the timeline, the permitting timeline at the moment?
We're budgeting about 3 years.
The Centerra Gold piece is where this gets strategically fascinating. When a producer takes a 9.9% equity position, not just a royalty, not just a streaming deal, but actual equity, they're signaling serious strategic interest. Centerra, coming in at 9.9% in April, tells you they did deep due diligence and decided this asset fits their portfolio. And the proximity matters. Kemess is only 45 kilometers away. Here's what jumps out to me about the infrastructure synergies. Ewan mentioned that Kemess has a fully permitted 50,000 ton per day mill, tailings facilities, and power infrastructure already in place. Now think about what that means for Thesis. Building a new mill and tailings facility is a massive capital expense and permitting headache. If there's a scenario where you can truck ore 45 kilometers to existing permitted infrastructure, you potentially slash your capital costs and permitting timeline. He mentioned they have quarterly technical meetings discussing geology and engineering. That's not casual conversation. That's scenario planning. The permitting timeline he gave is 3 years, but he noted the government is actively trying to reduce these timelines. British Columbia is in an interesting position right now. They need economic development in the north, they need jobs, they need GDP growth, and they're starting to recognize that mining projects like this deliver on all three. The fact that Mount Milligan got selected for expedited permitting as one of 4 projects shows there's political will to move these forward. What I think is most telling is the First Nations equity investment piece, even though we didn't get deep into it here. When Indigenous communities are putting their own capital into a project at this stage, that's a major de-risking signal on the permitting and social license front. That's not something you see often in junior developers. Bottom line, this is a rare combination of strong economics, strategic backing, infrastructure synergies, and a jurisdiction that's starting to get serious about permitting efficiency. In a market where development stage assets are scarce, these are the stories that get re-rated quickly. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.